particularly since Cathie Wood and ARK Invest made large profits as early investors in the stock. Tesla's stocks have garnered a lot of attention. Cathie Wood, the CEO of ARK Invest, is well known for her flamboyant stock selections, and she has been a Tesla supporter from the start. And she has declared that she would buy all of Tesla stock in 2022. In all, Wood's company, ARK Invest, held over 250,000 Tesla shares. She's been offloading part of it, but she still believes in Tesla and thinks the company will sell 20 million cars in 5 years, which will boost the stock price to $3,000 by 2025. We'll examine her reasons for increasing her stake in Tesla stocks today, as well as the implications of Wood's forecast for the future of automakers. Let's investigate. ARK Investment Management's founder, CEO, and Chief Investment Officer, Cathie Wood, has made a name for herself in the ETF industry. Cathie Wood is no stranger to placing risky bets on Tesla, having seen her groundbreaking ARK Investment Management generate impressive returns in 2020. She recently spoke about the tech sell-off in innovation stocks in an interview. As usual, she also spoke about monetary policy, fiscal policy, the economy, market signals, economic indicators, and innovation. Before delving into Cathie Wood's forecast for the future, let's take a brief digression into the Tesla stock. We'll learn Cathie Wood's motivations for investing her own funds in Tesla later. Tesla's stock is currently trading at $1029.96. The company shares dropped 10.57% during the first week of 2022, which was quite difficult. Some of the most exciting news for Tesla stock is that the Tesla Austin Gigafactory may be opening shortly, and manufacturing of the Model I is likely to begin within the next 7 to 10 days. Before beginning mass production and customer delivery, they have tested a few vehicles by building them and driving them out to make sure they live up to their specifications. The 4,600 batteries, which are very important for Tesla cars because they offer a greater range, can be charged faster and are less expensive for Tesla to build, are a key component of the model that will be unveiled in Austin. It is imperative that Tesla starts using these 4,680 batteries in the construction of the Model Y and Tesla Giga Austin. Another bit of information that surfaced was when Elon Musk tweeted that Tesla will be hiking the price it charges from $10,000 to $12,000 for customers who desire fully autonomous features for their cars. For less than $10,000, a number of people have obtained Tesla's full self-driving capability, and the company advances when its software is updated. So they will increase their prices as they approach complete self-driving capabilities. We expect Tesla to increase its prices when fully autonomous driving at level 4 is possible. As Elon Musk hinted to in a recent interview, this might happen as early as 2022. Let's return to Cathie Wood, though, and her explanation for why she took a big risk and essentially wasted all of her wealth. As everyone is aware, the majority of her endeavors are focused on disruptive innovation in her approach. These stocks have dropped more than 50 to 75% over the course of several months due to heavy losses. She underlined that the companies in which she's invested are currently trading at a very attractive price, placing them in a highly sought-after area for acquisition by investors. They might be increasing very soon in 2022. She anticipates a huge return compared to last year of up to 40. Therefore, there is still uncertainty around the stock market as a whole. And it's possible that the federal government will raise interest rates sooner rather than later. Thus, for Tesla and ARK Invest, that will be one of the most important things to keep an eye on in regards to the stock market as a whole. We adore ARK because they have a strong belief in Tesla. It was them who first became quite combative about Tesla before the rest of the world did. The long-term gains for ARK Invest are among the factors driving her significant investment in her strategy. She returned more than 200% with her design in the last 5 years have been fantastic. She invests not just investor funds, but also her own wealth and disruptive, innovative enterprises and her own initiatives. It's clear from looking at the ARK Invest strategies that they make cryptocurrency and 3D printing investments. They provide multiple ETFs as well. According to Cathie Wood's most recent assessments, as big manufacturers, GM and Ford lost market share, they would suffer with their gross margins. In an attempt to recover from her fund's poor performance in the market the previous year, ARK Invest doubled down on some of her favorite growing companies as the year got underway. 2020 saw an increase in her wealth thanks to investments in innovation such as Tesla. Despite posting an impressive 153% return in 2020, the ARK Innovation ETF is down 21% so far in 2021. Although Wood is certain that the pandemic is spurring innovation. She questions the rise in established manufacturers like Ford and General Motors at the moment. In contrast to Tesla's 3% loss so far this year, Ford and General Motors are up 18 and 6% respectively, according to our investor webcast, with Ford rising to 137. This represents a continuation of 2021 trends. In contrast to Tesla's 50% increase in the previous year, following the company's announcement that it plans to increase the number of electric F-150 trucks to 150,000 by 2023, Ford stock hit a 20-year high. When General Motors unveiled an electric variant of the Silverado, its best-selling pickup truck, the company's stock price increased. Just over 2 of their sales are electric automobiles, and she questioned whether the remaining 98 will eventually become obsolete as consumer demand shifts in favor of electric vehicles. According to her, the improving consumer attitude, rising used car inventories, and the end of the microprocessor shortfall suggest that there is more going on behind the still unrecovering new car sales downturn than just a supply bottleneck. I go through those announcements about electric vehicles. That's absurd when you think about it. Wood continued by stating that gas-powered vehicles make up the majority of traditional manufacturers' sales, with electric vehicle sales making up just around 2 to sales. Wood thinks conventional automakers are inferior to Tesla and electric vehicle producers. Businesses such as Ford and General Motors, for instance, may experience an unexpected loss by 2023 as a result of increased investment in the shift to electric vehicles and a decline in the market for gas-powered vehicles. Wood thinks that gas-powered machines will continue to lose market share to electric autos, and that traditional IMs were too late. Although investors praised GM and Ford for their attempts to switch to electric vehicles last year, the legacy companies are not accustomed to producing electric vehicles because they were raised during the industrial gas-powered era. She added that Tesla is expected to have a 20-25% market share and be able to take a quarter of the worldwide auto market in 3 to 5 years. By 2025, Tesla might sell almost 20 million cars. Conversely, Tesla sold just under 1 million cars in the previous year. In defense of her prediction, Cathie Wood said that Tesla already holds a 60% market share in the US for electric vehicles, 20% of global share. Wood anticipated that as more electric vehicles hit the market, Tesla's market share would decline in her company's earlier studies. To ARK's astonishment, however, Tesla's market share of electric vehicle sales globally is either stable or increasing, which gives ARK the confidence to be even more optimistic on Tesla. On the other hand, GM's third quarter 21 sales dropped to 44,697 units, decline of 218,195 units from the same period the previous year. They are attributing it to disruptions in the semiconductor supply chain, despite the fact that Tesla sales are rising steadily. It's crucial to keep in mind that internal combustion engine vehicles use 10 times more chips than electric vehicles. Despite the fact that Tesla's sales are rising each quarter, indicating consumer demand, GM is currently selling the incorrect product. The 2 biggest automakers in the world are Toyota and Volkswagen, which together represent a number of different brands and annually produce about 10 million automobiles. If Wood is right, then Tesla will overtake the German and Japanese giants in terms of market share. While investors and fans of Tesla will find Wood's prediction exciting, Tesla has indicated that its goal is to build 20 million vehicles annually by 2030. There's no denying Tesla's importance as an automobile manufacturer. Undoubtedly, Tesla's impact caused several established automakers to reconsider electrification as a possible avenue for expansion and development. Saving money on petrol is one of the reasons, since the price of petrol is at an all-time high. It doesn't seem fair to only cite a few examples when discussing Tesla. Rather, Tesla has helped many individuals switch to electric drivetrains by releasing new models, cutting-edge technologies, and raising public knowledge of the advantages of driving an electric vehicle. The company's sales increase each. Do you believe Tesla will be able to sell 20 million cars by 2030? Please leave a comment below.